The Boomerang Day Trader, the boomerangtrader.com site is our resource site for all things boomerang. On the home page, we talk about the 90% winning trade setups guaranteed. I guarantee those setups will occur for you. It's pretty much the same with crude oil, and we'll go over that today too. Um, but the stock indexes in particular, I've done a lot of research on, and those are the ones we guarantee. Now, our guarantee involves that the system Boomerang will produce 90% trade setups that are going to be winners. That doesn't We can't guarantee your skill. We can't guarantee any individual's trading skill, experience, or emotional strength or weakness or the ability to follow these exact rules. How could we? I mean, I've had people apply for Boomerang and they say, "Well, I'm colorblind. What do I do?" And I go, "Well, that might be a little difficult if you got a green candle and you think it's red, or you can't see that it's green." But anyway, we adapt to everything we can. I gave them some good ideas how to use solid and hollow candles, etc., etc. There's always a way to help somebody out if they're really serious about trading. But if you go to the resource section, what I'm going to show you right now is how the Boomerang method works. It's very, very simple. I'm going to always show you that whenever we start these tutorials, these seminars, so that we can just get warmed up. But one thing I want you to know is that if you go to the resource section and you scroll down here, you'll see the two Boomerang day trader setups for ending trades. This is the exact method that we use for trading with Boomerang. And you can watch this short video. It's a short video. The one today will be a little bit longer because we always take our time on these bi-weekly webinars. Make sure you get a lot of information that you need to become successful. And speaking of that, we have a lot of very successful traders with Boomerang. I got an email today from a wonderful person who I remember in the early days of buying Boomerang. He was following everything, but he had some little psychological blocks from being a trader for many years and losing. I mean, let's face it, when you trade for years and years and all you get is break-even results, or you're losing consistently, it's very hard on you psychologically. So when you come to Boomerang, and the method is very simple, which I'll show you in a minute, sometimes traders struggle with it because they think it can't be this easy. They literally, their mind will block them getting into winning trades because it can't be this easy. And that reminds me, a lot of the early founding fathers of motivational, particularly one of my favorites, his name is Norvell. He lived in Hollywood all his life, and he helped a lot of movie stars who were up and coming to really visualize their goals and implant it in their psyche. And he actually showed them almost mystical ways of burning an idea into your mind through simple things like writing it down, but reading it over and over every day and getting incredible results. He's one of my favorite writers, along with the modern folks like Tony Robbins and others. Just incredible. But I'm saying I really like Norvell, and if you get a chance, order some of his early books. The language is a little bit dated because it's from the 60s, but I mean, I'm telling you, you start reading it and amazing things will happen to you. So this trader had a little bit of a block because Boomerang was so easy, and I got a really long extensive email from him today. He said he's getting 90% winning trade, 90% winning trades. He's done a few little modifications to the method to make himself feel better. Every individual's got certain things, but he said he's doing really well, and he just wanted to thank me, and I was so glad to hear from him. The letter's kind of long, otherwise I'd put up and read it. I haven't asked his permission too, but we always hide the names, so it's not a big deal. But I just want to let you know that. So go to the resource section and learn about trend trading, which is brand new. We'll talk about that today as well. It's something, it'll add approximately maybe 2 to 3 Boomerang trades a day to your arsenal of trades. But think about it for a second. 20 trades, 20 days of trading a month times 3 trades, that's 60 trades times 3 points. That's 180 extra points. And at $20 a point just per contract, that's $3,600. That'll pay your mortgage just from the Boomerang trend trading method, adding those trades on to your arsenal every day. So with that in mind, I wanted to show you that, boomerangtrader.com, because what I'm going to do now is go over the exact method for trading Boomerang. Now, many of you have come to these trainings every bi-weekly, which is really smart because we all stay in touch that way with what we're doing. And the updates that I do, I can explain them to you more. But also at the same time, it just shows your dedication to becoming successful. And as Norvell talks about and other master motivation trainers, is that's really the ones who get there, the ones who they burn to be successful. They're not just like, oh, I get these, no offense to these people, but sometimes I get these people that call me and they're just really, or not call me, but email me and say they're really hammering about, will Boomerang really work? Will Boomerang really work? And they're really pushing it. Like, I don't know, they asked me 10 times. And I go, look, we guarantee 90% winning trade setups. The problem is not Boomerang. You're trying to put all the blame on Boomerang, but the real problem or truth is that the are you convinced that you can trade successfully? Do you have the guts and the motivation? And do you really honestly just have absolute faith in yourself? Because Boomerang will provide you with the winning trades, but you have to have faith in yourself. And a lot of the traders have been beat up because they were just winging it or trading off the seat of their pants, and they got really hurt. So now uh, they've lost a lot of that spunk because they just, it's a real simple thing. They were trading with an unproven system. Now, if you really think about it, it's kind of dumb. If you're trading with something that's never been proven or tested and it fails and you lose a bunch of money, well, isn't that to be expected, really? Now, what if you trade with something that's absolutely proven to work, that thousands of people use it and it works? It's proven with the methods that are given. Doesn't it make common sense that you yourself should also be able to succeed? There's nothing really in the way there except getting over maybe some past things about trading, whatever. And we help you with that too. That's what we're talking about right now. And that's how you can do that. So anyway, moving on, let me show you a couple things here. Here is this, we're going back to a couple weeks back, 525. Here's a Boomerang trade mid-morning here, about just past 6:50 here, so just 10 minutes before the top of the hour. And the market will often wiggle around for the first 15 minutes or so. I usually wait to trade until 15 minutes. I just like to look and see what's going on, get a feel for what's going on. And so once, by the way, if you can hear me okay, please type in a Y or a yes. I just had somebody remark they can't hear me, but I think, thank you guys very much. Thanks so much. I think it was just, I had it on mute when we started out. We're fine now, and thanks very much for the confirmation. Sure appreciate your participation. So I usually don't trade the first 15 minutes. Sure, there's trades there, but I just let the market kind of give me a hint because, they're opening up, saying they're gapping up on the S&P, and some news came out about whatever it is, and housing report comes out or whatever it is, and I just like to get a feel for everything that's going on. Well, lo and behold, here, 10 minutes to the top of the hour, here comes a Boomerang setup. You've got prices, number one, giving you a buy signal, opening up a new buy channel. See this arrow here? This is I don't mind. I keep the cursor on with the bars going by there so I can point to price. But right here, and it should show up, I think, on here with a special marker. So here's an arrow opening up the buy channel. The first thing you notice is you got the buy channel. Okay, that tells you get ready for a trade. First thing is prices move above the ideally flattening or pointing in the direction of the upside dynamic trend band number 2. That's this thicker line here. It doesn't necessarily have to be blue just yet, the bicolor, but the idea is you want to see prices above that and moving up, and in some cases, in many cases, I would even say most, we watch for a tap on the Boomerang or the Bollinger Band. This is a 14 period standard 2-period deviation Bollinger Band on NinjaTrader. We watch for prices to move above the dynamic trend band number 2, and we watch for prices go up and hit the Bollinger Band, and then we're watching for the color of dynamic trend band number 1, which is this dot dash line down here. That's going to be a key thing. These two elements, what are called the dynamic trend bands, are going to be very important. Another thing to watch for, of course, is as the channel opens up, of course you're going to get this thin, what's called the trade signal line right here, this thin dashed line. That's something I designed, and I use it to color the candles according to the bias. It's very sensitive, but we're going to use that to color the candles, and we're going to trade pullbacks to the signal line when we trade entries. It took many years for me to develop this. It's one of the key elements of Boomerang. Now, Ultra Boomerang also has an additional trend band here, which is called the Cobra, because it's tighter and faster, and it'll often give you pre-warnings of when things are going to take off. You see it's a little bit, it's going to blink on red, a little blink on green, red, but you can see it starts turning green. You're going to want to watch, in most cases, for the Cobra also to cross over dynamic trend band number 2. Now, you don't have to remember all this because there's one simple rule that we use that really gives you the entry permission, if you will, to get in. That's right, I call it permission to trade. And the reason is traders who buy Boomerang, I designed it for retail traders who were suffering from loss syndrome or from break-even syndrome. They want so bad to be a trader, but they aren't trading proven systems. They either bought something from some guy who doesn't trade himself, took a course, they don't know how to put it together. So the truth is, when you have a system that's proven and you've committed yourself to following those rules, the system rules will give you permission to take a trade. You never take a trade, what I call it what it is, call a spade a spade. It's called guessing. If you just make up a rule in the spur of the moment because it looks like they're going higher, or my gut feeling tells me they're going higher, that you can strip all the highfalutin sound away and call it guessing. Unless you're following your exact system, you're guessing, right? That makes sense. So similarly, here's the simple rule. If the dynamic trend bands, which you're only looking at these two bands after a trade channel's open up, are either within 1.5 points from the dynamic trend band number 1 of crossing over, in this case on the upside of number 2. Now see when I put the cursor here, that's why it's so valuable to have it. See when I put it on the number 2 here, see over in the far right it says 58.75. If I pull it down to dynamic trend band number 1, it says 57.25. That's exactly 1.5 points from each other. Does that make sense? The spread between the two is only 1.5 points. There's 3 conditions. Either the spread is 1.5 points or less, the colors are matching, which in this case you can see colors are matching on the dynamic trends, or there's been a crossover, as in the case right here. You see that? If one of those conditions are met, you trade a pullback to the signal line, which is right here in this blue dot. A dot will appear when it hits the signal line. A dot will appear. I have mine colored blue because it shows up really good in this chart when I'm doing these webinars. You have a wide choice of colors you can put on there, but I use blue for the buys and yellows for the sell because it shows up so good. You trade the pullback to the signal line. Now the best way to do that is to look over on the far right side of the chart and watch for the price marker. They're all colored gray here, but when you're trading live using the far right side of the chart, they'll all be marked in the colors of red and green and all the colors. The price marker here, you watch for that price marker box to merge into the trade signal line box, and that's where you take the trade. You can watch the right side and know exactly when they're coming together and hitting. You hit your buy or sell button, the dot will appear in a millisecond, and an alarm will go off. If you wait for the alarm, you can do that too, but you already know it's going to hit. You can have absolute faith that it's going to hit there if it's within 6 candles of the opening trade channel. That's how I programmed it. See here? 1, 2, 3, 4, 5, 6. Now here it's hitting the signal line, but there's no print of a dot because that's candle number 8. You see that? So you take that trade at 64 and they jump 3 points higher. In this case, immediately they went to 68 on this candle, and you made 3 points. Now 3 points, for example, on 4 contracts, when you build up to that, it's just a small account. You can trade 4 contracts in the mini NAS with the margin's about somewhere between $1,200 and $2,000 depending on the brokerage you use. So if you have a $5,000 to $7,000 account, the broker will be happy, you'll be happy. You got a nice cushion on there on those trades, and you can tell your broker to set a max loss limit or whatever you want to do, just to make sure that you don't get carried away. But you're going to be on the right side with Boomerang 90% of the time, so it's not a big deal. See, you're not going to have to worry that much anymore about getting stopped out and all the pain that you went through in the past with that. So now you make 3 points. Well, naturally you're going to say, well, gosh, there was so much more going up here. Well, yes, but it doesn't matter. You see, a professional trader, they set very specific goals, and when they hit that goal, that's their paycheck. And a lot of them, I knew guys in the trading pits would stop, and a lot of them, you know what their goal was? 3 ticks, 4 ticks. Now they'd go in the pit with one wave of their hand, they'd put on 20 contracts, and with one wave turn to the right of them, another wave of the hand, they're out of those 20 contracts. So they put on 20 contracts, and the things start, they say they're buying them, buy them 20, and they're looking up at the board, or they can actually hear, this is the old days, but they could hear the price in the pit, and 3 ticks later, he turns over and hands them to that guy on the other side of him, and he made a tremendous income, because back then the S&P 500, which was available in the Chicago pits, $500 a point. So 3 ticks, well, 1.500 if you had 20 contracts. What's that? 10 grand. Is that right? Five? Yeah, it's 10 grand. So 3 ticks, you made 8 grand. That's all hey, that's a good day. That's a damn good day, right? So that a lot of them do that. A lot of them trade smaller. There were guys trading 100 lots, 200 lots, huge size. A lot of famous traders down there. Anyway, now they're mostly upstairs, still doing it. They love it like we do. But so with Boomerang, 3 points, you have to look at in perspective. If you're a one lot trader, you're going to make $60. Well, Boomerang on a normal busy day, not in these summer doldrums. It's a little choppier and a little slower, but there's still going to be 4, 5, 6 setups a day. But on normal busy days, you're going to get anywhere from 8 to 12 to 13 Boomerang setups. So if you look at it that way, you look at just going to market as a job, going to work every day, and you're picking off with one contract 60 points times 5, 6, 7, 8 times, it's still a nice paycheck. But work your way up to 4 contracts. That's about $220 or so in round numbers per trade. So you make 3 of those, you got an $800 day. It's darn good. Well, in this particular example, recently I created a modification of our normal rule, which is called the trend trading rule. Now, the way that works is when you see a steep dynamic trend band, this market's strong, it's moving higher to the point it's so strong that the dynamic trend band runs up and crosses over dynamic trend band crosses over the Cobra. That's indicating that the market is probably going to thrust higher as long as this dynamic trend band number 2 is very steep. It's in a trend mood. There's a lot of punch behind that market. So when they cross over, you've got your 3 points here. When they cross over, you can trade a pullback to the Cobra price, and just watch that the prices stay within the rim, the shaded area. This is the trade channel, the rim of the trade channel, generally within that maybe by 1 or 2 ticks, or 1 point or so within the trade channel there, like they mostly will. You trade that pullback signal line at 70, and they shoot right up, handing you another 3 points. Now, I've had people ask me, well, what about once they shoot up, what about trading the Cobra again? Well, yes, you can. I would recommend when you get a real strong trend, it's real obvious from the things that I mentioned in the training video that we have on the blog, which, real quick here, this is it here. You can watch this video. I'm not going to go into extreme details in this today, but I have this video I made right here that'll show you all the details, which includes learning how to read the high five, the stock indices, the cash indices, a few things, nothing complex, very simple to learn. But if you want to go pro, it's good to learn that. Watch that video there. But yes, if they hit the Cobra and leap higher, you can grab another pullback to the Cobra. My recommendation is maybe two of them per trend. Sometimes you can grab three. I've seen them go up to six or seven where they just go nuts. The market's just going up and up and up, or down, 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 and they keep pulling back to the Cobra, and every time you nail that Cobra, they go down further. But up to you, do some research. My research shows, because I'm always trying to give you more of a conservative way to run your trading business. I would say two taps on a pullback to the Cobra is good on a strong trend. And beyond that, just watch your risk level, watch your stop. Go for it, because there will be times where you feel like you're just climbing a stairway to heaven, as Led Zeppelin used to say, that famous song of theirs, which, by the way, they recently got sued for because they copied the song from a group named Spirit they used to tour with. For those of you who are old enough to remember the 60s, lived in America, Spirit was quite a famous band, but they were friends with Zepp and used to tour with them. Well, Stairway to Heaven, Randy California sued their estate anyway, or his estate sued Led Zeppelin, and they won. So it's an exact copy of that song. A little side note, don't mind. We're trying to have fun on our bi-weekly webinars here. But sometimes you'll catch these pullbacks to the Cobra, and you'll do 3, 4, 5, 6 of them, again, with extra caution. Not recommended by me, but I've done them. You can do them. And you feel like on an uptrend, you're catching a stairway to heaven. Here's one, here's two, here's another one. It's going, man, oh man, all within this little space of trading, you've caught 3 trades. It's quite exciting. All right, so that's another method that we use to add trades to Boomerang. Now, if you look here, a little quiz for you. What does this configuration here tell you? This is exactly what we just talked about. You've got a trade signal saying we got a sell channel. Okay, that's a fixed thing. That's a lockdown. On this candle, that arrow is going to lock down. You'll get an alarm from it, and it's a sell channel no matter what. All you have to do next is say, are the dynamic trend bands within what? Are they within 1.5 points of each other from crossing over? Have they crossed over? Or are they matching colors? Now, the dynamic trend band number 1 always has to be the matching color of the trend channel. Thank you. Excellent, John. They have to be, the dynamic trend band number 1 has to be the bearish reddish color for a sell channel. But you can see right here after the trade channel, they're within 1.5 points each other. So all you do is trade a pullback this sig line here at 74.75, and you might get a tick or two slippage. Don't worry about it. I designed Boomerang to accommodate that. And you're going to hit your sell here at the market. You're going to watch the far right side, and when those two price boxes merge, you'll have the trade sig line box and the price box. When they merge, just go boom, sell at the market. The brackets will come out, and it'll place a 5-point stop up here and a 3-point gain down here. And right there from 74.50, they wiggled around. They went to 75.50, moved a point against you, and then dropped like a stone right down to 70.5, and you got 3 points. Beautiful. Well, then the market starts whipsawing here. The market fell further. All kinds of whipsaw started coming in. Now, that's one of the features of Boomerang. It's got a whipsaw alert. And that alert is simply this. When you see a spike candle, like this one here, if we measure it from the top 73.75 to 73 points or more, and you get a big spike red candle, then next to that you get a green one, then you get a spike green one. Those start spiking up. Then this one, although it's still green, it's spiked all the way down from 77 down to 70, just going nuts. Then you have a blue dot in the signal line, a channel opens, a blue dot, red candle, sell channel, yellow dot. There's nothing wrong with Boomerang or anything. The market is just flipping out, and Boomerang is responding to those price moves, and by setting up a pattern like this, it's telling you, stand aside. There's nothing you have to figure out. Boomerang will figure it out for you. Besides the fact that there's nothing matching here. Now, arguably here there's matching dynamic trend bands, but look at how far away the dynamic trend band 1 and 2 are. This is what's called a a wrong stacking sequence for trying to trade here, because when they're that, the stacking sequence of them should look more like this. Let's go over to a real nice stacking sequence. See here, green, red, everything's all misaligned. So you're not going to take a trade. It's very easy. You're just waiting for Whipsaw. You're waiting for what? After Whipsaw, the only thing to do is wait for all the dynamic trend bands to match to make sure the Whipsaw is done. In this case, and now notice the stacking sequence here. Dynamic trend band on top in the case of a short. Here's a sell channel. DTB number 2 on top. Just under it, DTB number 1. Under that, the Cobra. Notice the smooth, and they're all compacted nicely together. And here's the trade signal line. Here's a sell channel. Everything's matching. You get a sharp drop and then a reflex bounce to the signal line, and there's your entry. It puts it right on the line. You just go short right there. 72.75 drops immediately down to 67.5. 5-point drop in about, looks like about 30 seconds or less. And you get a lot of those with Boomerang because it's so accurate. My record's 7 seconds. I mean, just when the little electronic lady is telling you you entered short, before she's even done speaking, another electronic lady voice comes over and says, "Trade filled." It's pretty exciting, but I always have to tell myself, "Whoa, whoa, whoa! Be careful. This is a high-speed market you're in, and take it easy." Anyway, so what happens here? More Whipsaw alert. It's nothing wrong with Boomerang, nothing wrong with the market. It's just more Whipsaw alert. It's the prices going haywire, and Boomerang showing a yellow dot, blue dot, buy arrow, sell arrow, buy arrow, all in 3 candles. You got a buy arrow, sell arrow, buy. That's just Boomerang saying everything's going nuts. Stand aside and wait for what? That's right, matching dynamic trend bands. Now, in this case here, they used up all of the pullbacks, the sig line in this crazy configuration here. So when they finally matched, I have another modification rule for you that you can successfully use to trade Boomerang. And that I will explain to you right now. It's so simple. Those who attend these classes are well aware of it, and I'll explain it to you now. You can make a note of it. When you have a new buy channel like here, but nothing sets up correctly for the buy, you can see there's the configuration is not correct to buy these dots, and Boomerang uses a few dots and then the candles take off, so all the dots are used up. You can still trade after a confirmed matching dynamic trend band crossover with the colors matching, and the simple rule is you trade a pullback to the Cobra, which is right here at 72.75. Your automatic 5-point stop goes on there. There was about a 1.25 pullback, no big deal, and then they shot up. So what you did right here is you avoided Whipsaw. Boomerang told you to avoid Whipsaw. You saw a buy channel come in on the last trade. You saw the prices shoot up, and then you saw the dynamic trend bands match and then crossover. You have to wait for that crossover, but you want to trade usually within 3 to 4 candles of that crossover, a pullback to the Cobra. It's a modification rule just so you don't have to miss out on the whole move. And of course, they shot up higher. Now, one question that you might ask is, well, isn't this a trend trade here? Because the prices shot straight up after that congested whipsaw period, and he had a steep dynamic trend band number 2, and the dynamic trend band number 1 crossed over the Cobra. The answer is yes. And you can see here, right as that happened, fairly soon they pulled back and hit the Cobra exactly at approximately 84.75. and they shot up to 89.75, a 5 point move higher. And then what happened is, as he has the Cobra, what I call spread away from a flattening dynamic trend band number one up here, you get the dynamic trend band flattening number one, and the Cobra spreading away from it. In other words, they're kind of parting ways. One's going up and flattening, and the Cobra is going the other way and turning red. Obviously, that moves over, but luckily, because of that new trend trading method, you were actually able to capture an extra trade here, and it was permissioned because of the steep dynamic trend band. You might have missed this, or you might not have taken it, which is not even a problem. There's nothing wrong with missing a trade. That's no big deal. And by the way, Mike, I see your comment here from earlier, and I'm glad I mentioned what I did. So if that resonated with you, just know that it's going to help you with that. You'll get up every day and you'll go to work, and it's like you'll know exactly what to do. You make three, four, five trades, and you go, "Wow, okay, I'm a trader." But there's no more drama and psychosis and pain of, oh man. I mean, you're still going to have the markets get choppy or weird sometimes, or that's just part of trading. But generally, it's just going to be much more smoother existence. So glad to see your comment there. Here's again, and these dots, by the way, are going to trade to the signal line and pull back. I mean, they're going to, when they hit the signal line, they're going to print this dot. It'll be there forever. I could go back a year and it'll still be there. So it's not like everything, because I'm forwarding the chart or prices in live real time move this and everything change. It's not like that with Boomerang. These are programmed to record permanently if the signal line was hit. If it wasn't hit, they're not going to record there. That's a fact. So, same thing here. Look at this. Now, here's where it gets a little tricky because you got the market falling right off the wagon right away. Well, first of all, you got the prices falling. This is what I mentioned earlier. Now, this is not exactly part of the rule, but it's just a way to observe price that'll help you. You got to have that price trading under dynamic trend band number two in the case of a sell. Here's a sell channel. So that's good, but it's still a little bit upward sloping. See, if I put my cursor up there, you see you still got a little slice of pizza there. That's what I call a pizza slice. Very thin one, but now if I put it here, now you can see it's completely flat. So the cursor is a very good way to test that. Dynamic trend band number one has changed, and right here, let's check this candle right here. The spread was 87.75 and 89. It was in a 1.5 spread right here. See that? So you could have taken this sell here or this one here, and it instantly gave you 3 points. So just very, and I'm showing you this because we're going to go work on crude oil in a second. I'm sure a lot of you want to get into the crude oil a little bit here. And yeah, John's asking a quick question. I'm monitoring some of the Q&A here. Usually we say that till afterwards, but I don't mind. 1.5 points spread, because all we're doing, the simple logic behind it is we know when the dynamic trend bands cross, 85% of the time there's going to be a strong move in that direction when they cross. You see that? We want to take advantage of that force and make our trade as safe as possible. You can trade these other dots, but when you have this thing 1.5 points, I mean, that's just right on the verge of crossing over. You're making sure you got that crossover force backing you up. If they've already crossed or are matching the same color, you're good to go. Those three factors are going to give you maximum downside force in that trade, so we don't see it whipsaw on the upside, which it still can do, but I'm just saying when you got that kind of force there, the bulls are kind of surrendering to the bears taking over that downside move, no matter how small or large it is. So you want to get that forward. That's why we only trade around these crossovers, or as I mentioned in the trend trade moves and the modification. Those are the only three setups. It's so easy to learn them. But yes, is your answer there, John. If you just have 1.5 points or less, they've crossed over or the colors match. And that's a great tip. I'll check that out and look into that. It's a great tip. So now let's. You should be very familiar. We have many recorded classes on the Nasdaq here, but I want to switch over now to a crude oil chart because I recently wrote a report about that. So there's a crude oil chart now, and let me show you that under resources. Let me see if I put that in there. I believe because I did an audit of those crude oil trades, I had 7 days that I tracked, but I did 3 on the video, so I put it under 90% winning trade setups. I think that's where it is. Yes. Successful crude oil trading with Boomerang on this particular audit, although I showed you the figures, but I only was able, because I didn't want the video to get too long, I only tracked 3 days worth of trades. Still a lot, but the net result on this particular period, which was from 516 to 526, there was 7 sessions, 97% winning trades. I worked hard to figure this out. I wanted to get crude oil down once and for all so I could present it to you, and that's what we've done now with this video I'm showing you. And today's the first bi-weekly tutorial where we're going to go over a bunch of sessions too. 64 trade setups with only 2 loss setups, an average of 9 setups a day. Crude oil is very active. And if you want to trade before New York Stock Exchange, it gives you a chance because it opens an hour and a half before that. It gets really active right around 8 o'clock. So there's more time to trade, and also good for our friends overseas, over across the pond, as we say. A lot of them like to trade with Boomerang and trade the U.S. stock markets. Although I tell them you can trade DAX, you can trade zero stocks, everything. But if they like to trade the U.S., they say, oh, God, I'm up all night. I have to wait. It's kind of intense. I understand. I totally get that. Um, for example, crude oil, for me, I'm in California now for the summer when it gets a little hot in Las Vegas where I live, have my offices. But so I come to California, and it's a lot cooler here, much more pleasant. And it's 5 o'clock. If I want to trade crude oil, I got to be up at 5 o'clock. That means you got to get up at 4:30, and splash some water in your face, do a few exercises. You got to wake up and have some stuff to drink, and so you got to get up at 4:30 really to get it together to have your mindset ready to go at 5. Have the Ninja Warrior mindset ready to go. So I tend to I love the U.S. stock indexes also because there's so much information on the U.S. stock indexes, whereas crude, you have reports and stuff that come out, but it's not going to fluctuate according to if the Dow's up or down or the composite index up or down. You see what I'm saying? The advanced decline line on the Dow Jones Industrial Average is not going to affect crude oil directly. So you see what I mean? So on that deal, uh, we're talking about one contract trading for 8 to 10 ticks. Now, I have to say 8 to 10 because I would say most of the time when I track the 97% winning trades, I base it all on 10 ticks. Sometimes they go 9 ticks. It's rare, but they'll go 8 or 9 ticks. So you just have to keep that in mind when you're trading it. 8 to 10 ticks. That's 80 to $100 per contract. And if you got 9 trades and they're all panning out, you can see that you can, with just one contract on the crude, which has a little bit higher margin, but you can do very well. Now you have to have a NYMEX subscription, but talk to your broker and ask him if you want to trade crude. Tell him I want to trade the crude oil, the CL contract. What's that going to cost me to add NYMEX, or will you throw it in for me? You just negotiate with them. They're just like everybody else. Just negotiate with them. But during that period on those 62 winning trade setups on one contract, that was about $5,000 to $6,000 per contract after the commish in just 7 sessions. There's 20 sessions a month, so if you do the math, that's pretty darn good. What to speak if you're trading 2 contracts. See what I mean? So watch this video, and I'll go over some of those with you now. It's a different market. It's not like the stock indexes. It's a different kind of market. I mean, a chart is a chart is a chart, right? Especially a boomerang chart. They all kind of look the same. But the main idea, what you're doing using a standard 450 tick boomerang chart, it's crude oil, nothing different. All the settings are exactly the same. And what we're looking for is an 8 to 10 tick gain and a 12 tick stop. I was able to develop the system around crude oil with a tighter stop. And it took a lot of work, a lot of live trading, a lot of sim trading, a lot of experimenting. But the volumes, it actually, I believe they open at quarter to five, but the volume starts kicking in right around five. Yeah, like anything, you have to watch that every day. But here's a classic example. The rule is basically even easier than what I just showed you with the point and a half crossover and all that. That's for the mini NAS. But for crude oil, you want a new sell channel and you want the dynamic trend bands to match, and you trade the pullback signal line right here. See that? New sell channel. The DTBs match here. You pull back 49.08, and they're going to have to come down under 49 to give you 10 ticks. And look at that. They came down to 48.91. So big hammering on that there. So you got 10 ticks very quickly there. Let's do another one. New buy channel. This is even simpler because you're not using the three conditions of the dynamic trend band. You're using one condition. They match. No match, no trade. Here they match. They cross over. Of course, you want the crossover, but they cross over and match. Pullback signal line here at 49.09 plus 10 ticks is 49.19, and they shot up to 49.21 right here within 5:20:43. About, I think, 2 minutes. And again, nothing to do here. You're just biding your time and waiting for the crossovers. Sometimes they're going to do this like any type of trading. They'll just go down, you miss it, nothing got set up. But look over here. Buy channel. And I don't even know what day this is. Let me check it. It's 5:25. Buy channel, matching dynamic trend bands. Pull back the signal line, maybe not here, but at least here. 49.18. So 49.18 is going to have to go 49.28 to give you 10 ticks. And they ran up to 37. And a lot of these, if you stay in them and that thing rocket ships higher, it'll blow right through your 10 ticks, give you more. But for now, just like with the boomerang on the NASDAQ, stick with the system. And you're using a 12 tick stop, so it's really tight. It's quite pleasant. 12 ticks is, well, crude oil, it's all just ticks because one price is 1 point, 49, 16, 17, 18, 19, 20. It's like that. It's all just based on that price. It's a little bit different of a type of contract. So now, let me be honest here. I have not tested this for the um, continuation method, the trend method. We can watch it as we're doing, as I'm showing you this now, we can look and check it. Like here's a pullback to the Cobra 34. It held 30, it held 12 ticks, and then shot to 47. So it's worked on this one. I imagine it will work as well. Same thing here. Look at matching dynamic trend bands, pullback signal line, blunk. That was crazy. I don't know what happened there, but look at this. Buy channel, even though it's whipsawing, but you pretty much observe the same rules. I mean, would you really want to buy this fat channel that got roasted down here out of nowhere and then came right as they got roasted on the downside, they came screaming back in 5 candles? Probably not, but let's check and see what happened. Matching dynamic trend bands. The signal line pullback was 49, so we'd need 59 for 10 ticks. And they ran up to 58. Well, there's that 8 to 10 tick thing, but look at that. I'm just showing you how accurate. 48, yeah, 48 had a pullback to 38. Not pleasant. Almost hit the stop at 12 ticks, but 48 ended up running up to 50. 48 ran up to the high at 58, exactly 10 ticks. But notice how you're just looking at the matching dynamic trend bands. There's no other formula. Sell channel, matching dynamic trend bands at 36, and 36 comes down to 17 for 10 ticks. You're just picking up $100 bills in front of a steamroller. That's what I like to call it. It's fast markets and futures trading. You're picking up dollar bills or $100 bills in front of a steamroller. It's nobody in the right mind would ever do that except us. But actually, you get good at this. Use Boomerang, and it's quite a pleasant living. You get used to it like anything. This one went sell and they just collapsed. No trade. Here's a sell here. It's a set, it's like regular Boomerang. It's a second level trade. A buy arrow formed and locked in. That failed. Here's a sell arrow coming in here. Here's a pullback signal line with all the dynamic trend bands matching. 86 drops down to 65. 20 ticks lower. Wow. It's a good market to trade. Smooth too. Notice that? Now here's a crossover, but they're not matching. I mean, the rule really pretty much across the board, and you can do some research on your Boomerang and see across the board really the rule is matching dynamic trend band colors. Otherwise, it just works better that way. Buy arrow, matching trend bands, pull back to the signal line at 89. 79, it held 12 ticks, and 89 shot up to 49.09, shot up 20 ticks. It's pretty accurate. Like I said, it was one of those lost weekends where I said I really want to get this crude oil organized for our traders so they can start exploring it and use it themselves. Notice here, no matching dynamic trend bands. Just forget about it. But here, what do you have? Matching dynamic trend bands. Now, obviously, the buy channel opened up way in the heck down here, but that doesn't matter because right here you're still getting to pull back the signal line here and here, especially where the trend bands are matching. The pullback here, let's open this up here. I don't like scrunched up charts because I've seen so many guys running rooms and stuff using them to fraud people, so I just absolutely don't like to use them. Buy channel, matching dynamic trend bands, pull back the signal line at 96. 96 runs up to 49.09, 13 ticks higher. This, you see what I mean? How easy it is to trade crude oil because all you're doing is watching for the sell channel, obviously, and matching dynamic trend bands. You're not touching it until that happens. Here they are matching. Pull back the signal line. No pressure really. The stop pressure 97 went to 99, 2 ticks, and then 97 collapsed down to, on the low here, 78. On this candle, from 97 here, they collapsed immediately down to 84, 10 ticks. You get good at this, and you start putting on 2 contracts, and you'll be done trading, an hour into the New York Stock Exchange, and you can go trade the mini NAS, or you can just go do something else. Now here is a weird configuration, a buy channel, and their crude oil's flipping around. You're waiting for the matching dynamic trend bands. You can still buy a pullback to the signal line. There's no crime in that. It's just not going to be marked because all this got done early. But when they matched and crossed, you can still trade a pullback signal line or maybe the Cobra, but generally just use the signal line on crude, and they shoot right up. Now here, let's check this out. Here's steep dynamic trend band number 2. Here's a trend trade. Whenever that dynamic trend band number 1 costs a Cobra, the market is surging. It's got a lot of force, and that's what's causing that DTB number 1 to shoot over the Cobra. It's a different configured algorithm on these 2 bands that I invented. Look at that. Minute crossover, pull back to the Cobra, and shot straight up again. So far, the trend trading method is indeed working. Here, no matching dynamic trend bands, colors, no trade. You don't have to even think about it. All you're looking for is a match. New buy channel, matching dynamic trend bands. Pull back the signal line is at 36 and they shoot up to 43. They had to come back down to the entry and a little dip lower, but we're used to that, right? That happens. So 36 shoots up to 54. Isn't crude oil smooth? And then you're done for the day. Well, you were done earlier than this because you don't want that crude to run too far. A lot of times they'll run out of juice, run out of volume, but just keep an eye on the volume. You can you build your volume meter as I show you how to do that on the blog. Let me show you that real quick if you're new to the room, or just as a review. You go to resources. Scroll on down in resources and oh, we're growing. Look at our companies growing. How to set up a volume meter. You can see it's the same deal right here. Here's an expanded version. See? Tells you exactly the easy steps how to set this up on a chart. And any charting system you have is fine. You're going to put the crude oil on there. You're going to put the volume on the each 1 minute bar, and you'll add the ADX, which will give you a little additional information. So look for that under resources at boomerangtrader.com. So up here, then we move out of NASDAQ and we put it into crude oil. And it loads the data, and I usually just grab and drag this, shrink. We don't care about the price really. We already got a chart for that. We're just looking at the crude oil, and I haven't been actively following this other than just my research after market, but it's pretty easy to just look and see here that the market's just going along, a few little spurts and jumps here, but you can see that it's relatively flat, and then as you get closer to what's 5 o'clock, this is a West Coast chart because I'm out here in California, so I tend to just keep it on a West Coast chart rather than switching them back and forth. The minute they get around 5, which is 8 o'clock Eastern, look at that volume starts jumping up here where they're averaging 700 contracts in the CL. They're staying above generally on the 4-period average above 300, but then you see the market starts showing general strength, and that's where you want to make sure and trade it when it's looking real strong. And then as they come into, reports might come out. You have to be dialed into crude oil. I would definitely do some research on when reports come out, but overall, see, you're just looking for strong volume, and then when you can see that it starts dropping off almost exactly here. Right after the market closes. So that's how you tell. You just use your volume meter in that way, but pretty much 5 o'clock, 8 o'clock Eastern Standard Time when things start get cooking, and you got 2, 3, 4 hours of real active market there. So let me do some more examples. But did you see that? We didn't have one single trade on those examples get stopped out. And I'm just going over some random day I picked out here. This 5:26. So here's the market getting warmed up as they come into around 4:30 my time. And they start trending. Okay, so let's just take it just before 5. You can see they're trending higher here. Here's a buy channel, a pullback signal line, all the trend bands are matching, up it goes for 10 ticks. There's nothing here because remember, it's only if the dynamic trend bands are matching, so you don't have to worry about the 1.5 spread or any of that. That won't apply for crude oil. 8 to 10 ticks, normally 10, and 12 tick stop. Nice tight stop. Gain 100, lose 120 if you're wrong with 95% winning trades. If you missed this one because they weren't quite matching, well, you saw them cross over. I mean, the crossover element is still important, but I'm saying for crude, you just wait till they match. But here, um, you could have still taken this one, but the sell channel and you get these sometimes where the sell channel opens and the arrow goes kaplunk and the trade signal line, it's one big giant kerplunk. If you've heard that before, where they both hit at the same time, the electronic sound devices come at the same time, it sounds like one big kerplunk, and you usually miss those because they drop off quickly like they're doing here. But look, here's another one right here. 96 jumped to 02. It only went this 96 here with everything matching. Went to 02, which is just 6 ticks against the trade, not a big deal. And then off they go for 10 ticks. Nothing matching here. Well, arguably here they're matching, but the same rules apply. If you got a fat channel formation of candles shooting higher, just be a little bit careful. Here they're matching, that's true. 6 ran to 10. And then, you got stopped out here if you took this trade, or if you waited, would have been smart because of the pullback here. I hope I'm not sounding too monotonous. We're running into about an hour, and I want to get into your questions. Did you find good volume levels? Oh, John's asking in the research, did I find good volume levels? Well, what I just showed you there, I might have answered your question, and you might ask that earlier. You could go back over many sessions on the volume meter, but generally, if they're trading, 300 to 500 contracts steadily or more, that's fine. The only problem you get into is if you're trading and you're watching your volume meter, and this was after the market closed. But if they start dropping way down to 100 contracts, or something's wrong. It's not active enough. So you can still trade them, but you just have to be a little careful. See what I mean? I can put a volume meter, by the way, on here, except volume meter or the volume stuff on a tick chart doesn't come out right because the volume gets all screwball. 1 minute is the best thing to use. 1 minute. That way, each 1 minute that goes by, you know how much volume came in there. But you can't use them on tick charts. It'll just come out like one big straight thing across. Doesn't really measure it correctly. Matching dynamic trend bands right here, 10 ticks. I'll speed up a little, then we'll go into some Q&A. Look here, now this is weird. Here's a bunch of whipsaw going on, but still, once they matched, a pullback to sig line occurred here at 79, and they shot up to, you guessed it, 88. So there's that 8 to 10 ticks. I wouldn't take this trade anyway. You can, and it worked out, but it's like, yikes, too much whipsaw. You got to wait a little bit. Nothing matching here. See, it's so much easier with crude. You're only trading matching dynamic trend bands. Pull back right there. Smooth as silk. Look at that. No pressure on the stop. Nothing matching here. Here they are matching right here. Pull back the sig line. Down they go with matching dynamic trend bands. If you were brave, you could have re-entered again here and hit them. Let's see if we can get a trend. Yeah, because I want to test that trend move again. Buy channel, matching trend bands, no pressure on the stop, and they go up for 10 ticks. $100 bill on each trade per contract. Don't even tell me if you start trading 5 contracts, boy, you're going to get rich very quick using Boomerang on these deals. Nothing here. Here they are matching. Buy channel, right? Nothing here. Now they're matching. The pullback sig line comes down to 69, and they shoot up to 79 exactly. 10 ticks exactly there. That's why I say to 10. You got to be a little bit, up on your game here with trading the crude oil and have your finger on the trigger. Sometimes you just got to grab 8 to be safe. Better safe than have them pull back to your entry and get out for break even. Matching dynamic trend bands here. Look at that. Pullback sig line, 0 pressure on the entry. 62 runs down to 45. Same thing here. Matching dynamic trend bands. See, it's a lot smoother than the NASDAQ. I have to admit that, although I love NAS. I like the US stock index because there's so much information, but look at that. They match, they pull back, there's no pressure on the stop. 62 jumps up to 73, nails 10 ticks exactly. I mean, like I said, I went over, if I recall, I think I went over about 60 charts. I mean, I work hard. When I research, I just tell my little darling wife, I say, honey, I know you want to go out and do stuff, and we will, maybe later tonight, but it's going to be one of those lost weekends. And she understands. Hey, traders' wives, they see, they're happy. I bought her some new product cologne. That not that I had to butter her up, but they see the benefits of, you know, having somebody who works hard at trading and does research. She buys me gifts too, by the way. She's got a lot of money, so that's good. She can buy her hubby some gifts. All right, Matt, nothing to do here. This really easy with crude oil. You just don't even waste time trying to figure this out. Just wait for the trend bands to match, and they cross over, and the pullback signal. This got a little tricky here. A little whipsaw. 49 jumped up to 58, but guess what? That's 9 ticks. 12 is the stop. Just nearby, but you didn't get stopped out. Down they go. Look at that big solid hammering there. 50 ran all the way down to 24. And the thing is, you're already, by the way, just as a little hint, and I noticed this when I was trading it on the sim, I asked myself on a few of them, I said, let me just hold this just to see what happens. And you can do your managing the stop routine either using the rim of the trade channel up here, which a line can be applied to that, by the way, if you go into the Boomerang configuration. I don't know if you know this, and it's actually the line on the top of the rim is actually colored according to the bias, so you can do that. I keep them out because it's just simpler to read when I'm teaching and stuff. And I already know that's the price. I just put my cursor up there. I know exactly what it is. But if you want to try that, you can, if the dynamic trend bands cross and are matching color, you're probably going to get a trendish move in that direction. So you can always get like this one here. You got in, it held the stop, now they start moving. You can start trailing with, like, you could use the rim of the trade channel is really good for that price. And like I said, you can add that line in there. A colored line will actually color the bias and follow that as your stop, or you can use the dynamic trend band number 1 plus 3 ticks, or you can develop a system around it and catch the bigger moves. I like to give open ideas because a lot of traders will try different things and they get something they're real comfortable with, and that's what counts. Same here. Now, this is the next day, 27th. Right away, everything's matching, right? So you got 96. 96 jumps to 02. No big deal. Little pressure, but no big deal. And then 96 drops down to 70. 26 points lower. It's a lot of money. 260 bucks per contract. So again, you could have got in, made sure it didn't get stopped out, and then trail it using the dynamic trend band number 1 or the Cobra. You could create your own little marking system. In other words, as price moves lower, you use the last candle plus 4 ticks. I know a guy and guys and gals too, some brilliant, where they trade what's called pure price action. You get short, the market moves lower here. You put the stop 3 ticks above this candle. This moves lower. You put the stop 3 ticks above this one right here. It moves lower again. You put the stop 3 ticks above the last candle. It moves lower. And you put the stop 3 ticks above this one, and then here it stops it out. So you walked it all the way down using that method. That's another method you can use if you don't want to use the Cobra or the DTB number 1 or the rim of the trade channel. That's a very good method because you're just completely counting on the price to keep you in the trade or reverse and stop you out at a reasonable level where it technically shouldn't go if it's going to keep going in one direction. Look here, a buy channel. See, so all this whipsaw doesn't really matter when you're trading in crude as much, because as long as the dynamic trend bands are matching, there's a pullback signal line at 86 and they go straight up to 01. So I could go on with this for quite some time, but I'm just giving you a real clear impression that these trades are smooth, they work out beautiful, and they're a little easier to figure out because you don't have to calculate a 1.5 spread or a crossover. You're just looking for the trend bands to match and to pull back the signal line. Right here, look at that. They came in right there, 85, 85 shot right up to 96 in one fell swoop. Boom, 10 ticks. You say, well, I feel brave. I'm going to rebuy them down here again. They pulled back a little against you and shot straight up again for another 10 ticks. Amazingly smooth. I'm going to convince myself to become a crude oil trader. The only problem is I'd have to change my whole life around, because I get a lot of emails every day and a lot of training that I do. And if I'm getting up at 4:30 every day, pretty much by 8 o'clock or 9, I'm going to have to, just go relax and do something else, because and if I got 30, 40 emails waiting for me, it's going to be a little rough. So, but I love trading NAS. NAS is fun. Lots of drama there every day and lots of fun. Anyway, same thing, matching dynamic trend bands. Nothing happened here. It's one of those, where they just shot up to the moon, and those are going to still happen, of course. Um, you can always trade a pullback to signal line when they match. Like here, up here, your risk goes higher, but the nature of crude is it's so smooth. And I'll get to all your questions here very soon. Just just watch for them here. There's no trades here. There's no matching dynamic trend bands here. And a loss in the trade's only 12 ticks. And every trade I've showed you has been a winner so far. And I'm not hand picking them. I don't even know what day it is. What is this? 27th of last month. It doesn't matter. Look at that. Matching, sell, down they go. Whipsaw, stand aside, nothing matching here. You're not going to trade in whipsaw. I mean, that you can, but it's like here. Sell channel, the trend bands are matching. Here's a pullback the signal line. 23 goes down to 12. Just ekes out, or no, it went right exactly to 13. Ekes out 10 ticks there. Probably shouldn't be trading in that kind of radical whipsaw. Just leave it alone. Here's the trend bands matching here. This is pretty congested and weird here. This is too, but if you waited and got another buy channel, that one turned into a winner. This one, you wouldn't really want to trade this because the Cobra and the dynamic trend band number one are all crunched together and they're blinking on and off like a cobra shedding its skin. It's just kind of blinking on and off. Let's see what happened here. Pull back to the signal line at 25. Went to 17. It held the stop, even though you got really super whipsawed. 25 held the stop here of 12 ticks and shot up. Nothing here. Trade here, and this is later in the day. It doesn't really count, but I'm just showing you over and over how wonderful trading with crude oil can be with the standard default Boomerang settings. You don't have to trade anything. You use a 12 tick stop, 8 to 10 point gain, normally 10, and you just get going around 8 o'clock Eastern Standard Time. Let the dynamic trend bands match first. Trade the pullback signal line and look for 10 ticks, and just sit there all day and wait. Look, buy 10 ticks. Here's a trend move crossover. Didn't quite pull back and hit the Cobra. So again, I haven't fully tested the trend trade moves. Not to worry, you'll get plenty of these. Look at that. This is aftermarket. Still, I mean, you can trade it round the clock practically. Crude oil, is truly a global commodity Whereas the stock market, everybody is U.S. based. People are still trading on Globex, but not much. Everybody's asleep in the U.S. That's the majority of the traders. But crude oil's going all over the world, trading all the time. So same thing here. Uh, Choppy markets with mismatched dynamic trend bands. Here they're matching. So let's see what happened here. 53 came down to 46. What is that? 7 ticks. But you're trading a really radical, congested whipsaw environment. You're better off waiting for a nice, smooth appearance of matching trend bands with the stacking sequence. See, this stacking sequence is weird too. You just got to wait. It's pretty obvious when they set up. You get in, you get out. Here again, a buy channel matching dynamic trend bands at this point, this point, and this point of an average price. Let me give you the worst price is 92. 92 pulled back to 89, shot straight up. I hard pressed to find a losing trade in the deal here. Here's the matching dynamic trend bands. Well, arguably on this one, if not on this one. Let's see if this lost. Uh, 91 went up to 98, held 12 ticks. I'm not making this up. You got to follow the rules. 91 held 12 ticks and came down to 77. It's pretty smooth. I was amazed when I first started digging in. Then I started creating those rules and determining the modifications, and there weren't any really. It's just the one modification I came up with is just wait for the dynamic trend bands to match. It's so much easier. You don't need to worry about it. Just wait for them to match, because when they match, that crude oil takes off in that direction like a rocket ship. Take your 10 ticks and make your life easy. If you get something like this and you think there's a big move coming, then just trail it using the method I just gave you about adding 4 ticks to the last, when they're going down to the last high of the previous candle, or just make it easy and use the Cobra and the DTB when they cross over. Just trail them that way. That's another way to do it. Look at that. Matching trend bands, down they go. Pretty amazing, isn't it? So I'll stop here going over these. I just wanted to show you that. And I talked about the crude oil methods. We talked about the volume meter today, which you definitely want to build one of these volume meters and just make it like about this size and keep it tucked up in the corner of your screen, off your chart, but tucked up in the corner of your screen, so you can just constantly monitor what they're doing in the volume. Just eyeball it and say, oh yeah, volume's normal, no problem. And then we also talked about the trend trading method for mostly the U.S. stock indexes. We saw that it was working on the crude oil as well, but I haven't really tested that out. But really, crude oil just sets up an average of 9 trades a day, even in these slower periods here. A little slower for the U.S. stock market, but crude oil is not slowing down. An average of 9 trades over that period I did. And I imagine if I audited 3 or 4 months, which would be hours of video or whatever, you can do it yourself with your own Boomerang charts. Even if you don't go live on the NYMEX, just get delayed quotes and you can still backtest it and you can sim trade it, because it's still going to come in and print on the chart, because a delayed quote won't matter on this simulation trading. You see what I mean? And go through a couple sessions, you'll go, wow, it's exactly like he showed in the seminar. The trend bands match, they hit the signal line, boom, off they go. So it's quite exciting, and it's been an exciting day. Happy to share this stuff with you, and thank you very much for attending this, and I most appreciate it.